morning and welcome to the trade setup right here on BloombergQuint. I'm Niraj Shah and it promises to be a good day of trade. The cues at least seem to be very, very positive and a bunch of things. So it's important to take stock of the fact that there is a bit of an alignment of or confluence of good news today, and all of which might help the long trader in today's session. So firstly, let's start off with the news around the world when it comes to the virus impact and the economic impact. Really not as much a virus update, I think that's known, but today a lot of other updates. So the one bad news is that US jobless claims stopped the $5.2 million mark, and it has erased a decade of job gains since the last recession number, so period. So that is that one piece of bad news. But aside of that, Donald Trump has outlined plans for the reopening of the US economy, and that has actually led to the US markets doing well, and I'll come to that in a bit. And a Gilead coronavirus drug trial has apparently shown encouraging early results. These are reports. They're on the Bloomberg.com and BloombergQuint.com as well. So do try and read more about that. But this is the important piece of news that has come out. Now, what did all of this do to the US markets? One, and what is it doing to the US futures right now? That's the important piece. So first, the US markets ended reasonably okay, with NASDAQ being the key mover, 1.4% gains. And with this up move, the NASDAQ has virtually made up for all the losses in 2020. That's the extent of an up move that we've seen in the tech indices in the US. But that's not all. For today's session, US futures are in the green, up about 3 or 4% the last time I checked. So that is looking very, very robust. Asia has had some gains today. So some bit of green across the screen for the Asian indices, and the SGX Nifty at about 7:30 was up about 250 odd points. So really strong show by the SGX Nifty as well. Just watch out for the rupee. Yesterday was weak, but the dollar has retreated against all major indices, all major currencies, and therefore the rupee might actually show some gains as well. And the two big pieces of things that every Indian should watch out for, Indian market watcher should watch out for. One, Prime Minister Modi has assessed the virus impact on the Indian economy and assesses the possibility of a second stimulus package to boost sectors hit hard by the pandemic. A lot of people believe that we might actually see some announcements closer to the weekend. So that is one key announcement to watch out for. The other thing, and today, 10 a.m., RBI Governor Shaktikanta Das is going to address the media. And a lot of expectations from that as well. Frankly, the RBI has been well ahead of the curve and giving out heavy artillery. So it'll be I think the markets would be hoping that there'll be something interesting that will come out today. So watch out for that. And all of this leads to the possibilities of a risk-on trade being very, very high in the session today. Some short covering led up move. I won't be surprised if we see that. I mean, we'll start off higher, and then a bout of short covering might come in for financials and some of the banks, and therefore it's a really important thing to watch out for. Belief of a package might keep banks and NBFCs in focus, and I would watch out for this pocket in particular in the session today. And not too much to take home from when it comes to the FI data, because frankly the FI numbers have been very, very patchy the whole of April. This is the April data that I have for you, and look at it. The bobbing between the positive and the negative for the FI data. So don't quite look at fund flows for any conclusive sign of what the foreign institutional investor is thinking. And therefore, what are the stocks that you should monitor? I think that becomes very important. Keep in mind, in Gujarati, they say that the vakar saro che, which means that the time for the market today seems to be positive, and therefore you got to, as a trader, keep yourself in that frame of mind for the session today at least. So CLSA, TCS numbers came out, and you all know we've did enough analysis of that. Just bringing that CLSA view out there, one of the brokerage names essentially, they're maintaining the buy. They've cut the target price. They're saying, of course, that the margins are resilient in Q4, but may come under pressure in FY21. But they believe that it's best positioned to exploit the digital adoption at better margins. Frankly, TCS saying that they come out of the Q4 with an order book that they've not seen in a really long time or ever, and that actually shows that the deal closures have been positive. Let's see if TCS reacts marginally positive in the session today, but it might be a defensive bet, so IT may not necessarily be the front line. What would be front line? NBFCs. Viewers, L&T Finance, M&M Finance, Piramal Enterprises. Piramal was down in the red today while the others were up, but I would reckon that all NBFCs should be in focus today, so you've got to keep an eye out for NBFCs in trade today. Tata Motors, the long-term issuer default ratings has been downgraded by Fitch to a B from BB-. But I think along with NBFCs, autos would firmly be in focus. Commentary from Maruti, commentary from Motherson Sumi, all of them seem to pointing towards a revival in auto demand in China, because people are opting to buy first-hand cars as opposed to using ride sharing right now. There might be some near-term moves out there, and along with the positive sentiment today, You might well have autos being in focus. Lastly, Oberoi Realty, they've repaid NCDs worth 125 crores ahead of the scheduled date of repayment. That should augur well. And Morgan Stanley on telecom is saying, that the telecoms have outperformed in March 2020, benefiting from the risk of environment, and the telcos are relatively less impacted amidst the COVID-19 pressures. Bharti's been under a bit of stress the last 2 or 3 sessions. Let's see if there is a bounce in the session today. Last but not the least, I'm not saying that this is what will happen, but it's our duty to bring you some data points which are important according to us. And this Goldman Sachs note, wherein they have taken data from Bloomberg, shows some very interesting data of what happened in 2008. Peak to trough, the downtick was about nearly 60%, but within that, there were a bunch of instances, time-wise and price-wise, wherein there were some sustained bounces seen. So 22nd Jan to 5th Feb 2008, 10 trading days, 12% bounce. 17 March to 2nd May, 30 trading days, 16% bounce. Similarly, 27th October to 10th November, 10 trading days, 25% bounce. So amidst a larger drawdown of nearly 60%, we saw some substantial bounces that came in, and I'm sure there are reasons attached to these as well. I'm not saying, therefore, this is one of such bounces. This may well continue forward, but you've got to keep in mind that bear markets typically tend to show some large pullbacks, and you should be prepared for that. Thanks so much, viewers, for tuning in to the Trade Setup today. Have a great day ahead.
According to a recent report, women today contribute nearly 70